Good morning, good afternoon, and good evening. I'm Diana, and I am the Global Blockchain Business Council's Head of Research and Sustainability. It's a pleasure today to welcome you to GBBC's Virtual Members Forum on Smarter Financial Markets, Tokenization, and On-Chain Finance. We are a bi-weekly webinar showcasing the innovative work of our members around the world. And today we're joined by William Herkelrath, Managing Director of Business Development at Chainlink Labs. The world's most prominent financial institutions are quickly realizing the opportunity for digital assets to redefine financial markets. Banks, financial services companies, and other organizations are moving operations on-chain to access deep liquidity for previously illiquid assets, to reduce costs via automated workflows, and to develop higher integrity markets. Critical to this move is a secure interoperability solution. So tuning in today, you will find out how Chainlink is providing a secure gateway to on-chain finance and seamlessly connecting enterprises to the Web3 economy. We welcome your questions at any point during today's presentation, so please submit them in the Q&A tab at the bottom of your Zoom screen, and we will take them after the presentation. Thank you, William, for joining us, and I will now hand things over to you to begin.
Great. Thank you. Pleasure to be here. I will encourage you to stop me if, for whatever reason, something goes wrong, or if I'm getting off track, or if there's a question that's prescient. We don't necessarily, feel free to stop me if it's relevant. We are going to talk for about the next 20-25 minutes about what we're seeing here in the financial markets. I happen to live in New York, so there's going to be some confirmation bias, perhaps. I might be a little bit New York centric in my opinions, speaking quite a bit to the folks that tend to be in and around New York or London. I don't spend as much time in Asia, and I know that there are, in some ways, Asia market is even further along than what we're going to be talking about here today. So keeping all that in mind, we'll just kind of go through some of the trends and think to ourselves, first of all, what is the actual opportunity for on-chain finance? What those technical challenges might be. We are going to do some shameless plugging here at the end and talk a little bit about Chainlink, but first and foremost, I want to talk about the broader market opportunity and what we're hearing from clients and partners in and around the markets today. So this is a little bit overly basic. Apologies for those people who already know the promise of blockchain, but it is good just to kind of start reminding ourselves that in a previous world or traditional world where everybody is having their own isolated databases and building their own isolated applications on those databases, you get the traditional systems that we have today, which is the left side of this slide. And on the right side of the slide, we have this world where actually everyone is speaking from a combined database. And I think what people miss is it's not just the efficiency and the ability for everyone to have the same information and to have that information cryptographically guaranteed. That's the value. But it's also the fact that applications can feed on top of other applications, and third parties could build applications which then feed into other people's applications. And you get this cascading effect that can occur with blockchain if everybody doesn't have to first and foremost agree on the facts. If the facts are already understood across all parties, you can really unlock a tremendous opportunity when it comes to ecosystem and growth and partnerships, whereas from a world that you can't see today, right? This is one of the things about blockchain that I don't know if people really seem to get their heads around or understand the value of everybody being able to contribute to a project or to an outcome rather than just individual firms forcing themselves into their own little silos. And it's that kind of promise that the World Economic Forum and BNY Mellon and Celent have gone out with their papers, and there's probably 10 other papers we could reference with really, really big, exciting numbers. The numbers that we happened to pull for this presentation suggest that something like 97, 90, whatever % of institutional investors are already bought in, that a very large number of alternative assets are probably going to find their ways to blockchains. World Economic Forum quoting trillions and trillions, hundreds of trillions of assets that are sitting to be and waiting to go on chain, and the liquidity that can offer, taking markets that might be trading at T plus 30 or T plus 45 today into a 24/7, 36, 365 rather, type of a system could just be overwhelming, right? So this is partly why everyone is excited about what we can accomplish, and why they believe that the future is absolutely on chain. So what is it that would potentially moving on chain? I think we're all still figuring that out. Some of the early projects that people have talked about are carbon credits. You see some public equity moving on chain. There's a bit of fiat. A lot of all of the stable coins are basically on chain versions of fiat currency. Franklin Templeton has made a huge amount of noise with their money market fund that's now available and trading on chain. I guess you could call that either private equity or deposits. Public debt, there are certainly some bonds that have moved on chain. All of these markets and I think that the answer that I'm hearing more than any other answer here in New York in particular is things that aren't already being traded efficiently could benefit by trading on chain. We often find ourselves in conversations where people are trying to fix the T plus 3 to T plus 1 problem. And they say, well, this is a wholly efficient market, but it settles in 3 days. I don't think that is what people are as excited about fixing, because they already have pretty good systems in and around those things. But there are these other concepts that are far slower to change hands, much more difficult to move carbon credits between parties, much more difficult to move large industrial investment products between shareholders in the current world. These are the types of activities that we see are moving further, are closer and closer and faster into the world of on-chain finance, simply because of the liquidity, the openness, the speed with which the entire market can operate once you've tokenized and moved that data into a unified database. Effectively, this is a bit of a restatement, but you're talking about the integrity of data, excuse me, the utility that you get when you move things on chain, reducing the costs. It's significantly, again, much easier if we don't have to all operate our own sources of truth individually. If we can have a shared source of truth, that is a tremendous operational efficiency cost. Liquidity, as we've already mentioned before, once the data is on there and it can be traded amongst parties, so long as there's KYC pools, by and large, for the large institutional players, they can swap those tokens at will, right? And then, of course, just the transparency of understanding and reminding everybody exactly what these projects represent, how much is outstanding, how much is in motion, how much is for sale. All of that data doesn't often exist for some of these complicated projects today. And all of these benefits are going to be immediately evident in the on-chain world. There are, however, some technical limitations. Blockchains and their basic premise are not connected entities. They are databases, right? They are not application layers. They do not inherently talk they don't actually have a user interface. There are people who build user interfaces to help you explore a blockchain, for example, but the blockchain itself is just a series of blocks that are being validated by node operators, right? There's no inherent user interface. There's no inherent backend system. There's no applications. There's no messaging that's associated with it. It literally is just a database in the simplest of terms, and they don't even talk to each other. There's no mechanism or inherent mechanism for a blockchain to even have an executable piece of content that is automatically doing things by itself, or speaking to other blockchains, or doing any of those other works. All of the work that has to be done to make sure that these blockchains are being used effectively all requires applications, right? They all require third-party applications or some sort of developer to come in and build systems on top of them, which would allow for all of these things to occur. And the financial institutions, they can all maybe hire their own 5 or 10 experts to try and build all this up, but there's just a limit realistically as to how many people you can possibly hire, how many people can you possibly bring in to do all the connectivity you need to do to operate successfully in this ecosystem. And so you kind of see some ecosystem pools happening. There are, let's say, a DeFi ecosystem that is, has a bunch of big players in it. And some of these folks kind of talk to each other and they've built some systems, but most of these are independent silos as well. They don't necessarily talk to one another. But as a whole, the DeFi ecosystem doesn't necessarily talk to the public and private blockchain network, which we have on the left, right? Some of them are basically choose which public or private blockchain they want to operate on, and they do most of their work there. Some of them offer services on multiple blockchains. They're trying to get ahead of that curve and try to be more, more toward a future where multiple blockchains are in place. But there's nothing inherent about the underlying blockchains that allow them to talk to or interact directly with the DeFi ecosystem. Same thing is true with basically all the rest of these circles. Bank platforms tend to operate in their own private ecosystems. They don't necessarily talk to all of these other bubbles. They can, again, the developers over here can decide that they want to build a specific bridge over to a particular blockchain or a particular player here. But each one of those decisions is in and of itself kind of like okay, well, now we should do this, and now we should do this. And there's only so many things you can choose from. You have to kind of pick and choose your winners. You've got your tokenization platforms over here, which are maybe tokenizing the assets. Again, they don't necessarily, they might be tokenizing on their private chain. They might be tokenizing on a specific public chain, but that data is not necessarily visible to all the other public chains. It's not necessarily visible to where the markets are. It's not necessarily visible to what the banks can see. They have to go out of their way to integrate and create connectivity between what they're doing and wherever their clients might be, or where either the clients that are trying to sell those tokens or the clients that are trying to buy them. They kind of own the responsibility for doing all of that themselves. And then you also have the whole verification layer. It doesn't necessarily exist. Each one of these companies does, by and large, their own KYC. They will often use third-party platforms to do it for them, or third-party providers rather, but they don't go out and they're not connected inherently to those things via a web connection, as much as they just have usually a back office that is handling KYC, AML type questions. Of course, there's already a historical KYC AML built into how the large banks work today. But these things also, they're not connected, and they're certainly not connected to the on-chain KYC AML providers that are out there providing the data either. So you have what we think is this interconnected world, and we have everyone moving things onto blockchains, but yet we actually find ourselves with hundreds and maybe soon thousands of independent islands in which these systems are operating. We still haven't really achieved what we think we're going to achieve with the concept of Web3, because we don't have interconnectivity between the language that all of these parties are speaking. We're a little bit biased here at Chainlink, but I think most people who are looking at the market tend to agree that is in fact this concept of universal interoperability that is really holding us back, right? We cannot, there's only so far we can go if we perpetuate the traditional way that we brought up about 5 slides ago of doing things, which everyone is operating in their own silo. That was the restriction of the market. The restriction of TradFi is that you were operating in your own little world, and the promise of blockchain is that you would be able to operate off a universal set of truth. If in fact we move to blockchain, but we still do this type of a model where everyone is doing their own little thing in their own little cycle, we haven't actually taken advantage of what the blockchain offers. But if we use the blockchain instead to bring all of these components into a single source of truth, then we can truly take things to the next level. We spin off a little bit now into the Chainlink story, largely because that's, I think, our expertise, and where we spend a lot of time talking to individuals who are working on this challenge here in New York, London, Asia, and the other parts of the world. And what we see is that the world that we're building out effectively today removes those barriers, right? It allows anybody to provide data into or through the use of oracles into the network without restriction, having those oracles read and interacted with, regardless of what blockchain you're working on, bringing real world data on chain, taking information about what's happening on chain and pushing it back out to real world data on the right. All of that being effectively through a decentralized compute layer, so that you don't have to necessarily take any of the hardware burdens associated with interacting with blockchains today. So I don't know, 10 years ago, when people started playing with blockchains, almost everybody would start with hardware. That's where the journey began. You have to spin up a node, you have to get started, you have to get some hardware going. Maybe you're going to start mining, maybe you're going to start passing data, whatever you're doing, hardware was the first step. Now the market has completely evolved to the point where you actually don't need to be involved in hardware. There are plenty of hardware providers out there, and there's plenty of software out there that can help you connect to those hardware players. And now we're really getting into the fun stuff. Now we're getting to the point where we can really, I think, people can build applications and focus on the software and focus on the use case and focus on the user interface and focus on the end user. And they no longer really have to think about how the blockchain works, actually, to be perfectly frank. We're getting to the point where they can just build what their clients need and want. And they can let the core infrastructure players like Chainlink and others just take care of the blockchain leg for them. We've been doing this kind of from the beginning. There are, an enterprise grade security. Well, I'm not going to just read these slides directly outright. Node operators, including some of the largest names in the world, the Swisscoms, LexisNexis, Deutsche Telecoms of the world, who are operating the Chainlink network. Infrastructure that's been around since the very beginning, enterprise grade security, and basically, as we'll see as we got more into the story, a group of individuals who are absolutely a security first type organization. The reason why this has worked at the end of the day is that we firmly believe that this future is powered by decentralization. As we get further and further into the story, I think we believe that the more that people are operating in their disparate individual islands, the more that a tokenization platform is not necessarily connected into real world data that's being validated and verified by other parties, the more problems that one can have, the more attack vectors one could be subject to, the more potential fraud can be potentially brought to the world if, in fact, you don't have third parties verifying that an underlying asset is even real. We've seen that with some of these stable coins, that people have been finding out that actually underneath that stable coin, there isn't necessarily a real US dollar or a real euro or real whatever else. So the more that we can interconnect these systems and make sure that carbon credits aren't being double spent, or that flight miles are in fact not being double spent, or there's a lot of esoteric markets out there that people are trying to build, all of which works really, really well if in fact we can all verify using security, using an infrastructure that's been time tested, and using node operators to serve that data that represent this. These are the same players that run the internet, right? When you talk about the large telco companies that are getting involved in blockchains today and getting involved in the Chainlink network as well, these are the same names that are running your good old-fashioned internet nodes. People don't really think about that anymore, but the internet is actually run by companies as well. It's run by node operators, just like the blockchains are, but we just don't think about it. We go to our browser today, we type in a URL, we get to a site. It doesn't occur to us that there's all these companies behind the scenes that are actually serving that data. That same vision is what blockchain will eventually become. We will simply just go to our whatever user interface is, we'll insert commands, and we won't really perceive that behind the scenes, all of this hardware is doing all this amazing work on our behalf. Most of our success here has been, I think, in the last 4 or 5 years. We've seen markets really, really explode. I don't like to brag. These numbers are pretty big. You can see them for yourselves. They're all up and to the right. That's what you're supposed to do, show charts that go up and to the right. We've recently moved to this nice dark background with these kind of lighter colors. It really is a striking slide compared to what it used to look like. But there is a tremendous amount of activity moving on chain. Now, a lot of this is DeFi, which is in a tremendous and exciting market. Obviously, trillions of dollars are moving through DeFi. There are, billions of data points that are being delivered on chain to service those markets. And the number of players in the system continues to grow year over year over year, quarter over quarter over quarter. I think the most important thing is actually kind of hidden down to the right here, and that's the developers, right? The communities, the hackathons, all the other work. The number of people that are actively working in this ecosystem now is really probably at the end of the day going to be the largest determination of success. I think Ethereum is probably what Ethereum is today because it attracted developers, whereas because it offered smart contracts, because it offered composability, it got developers involved. And once you get developers involved, then you see applications being built, and then you see new versions of that, and then you see forks, and then you see, Ethereum became what it became because of composability, and that's the same thing where we see with Chainlink and other protocols. This is about bringing developers in, and the more exciting things that they build, the greater opportunity that people can then build on top of their work, and then people can build on top of their work in turn. The only other thing I want to say about the protocol itself is that everything is based on that decentralized consensus, right? So when we're talking about the value of moving data around on chain, it's very important, particularly on immutable chains, to make sure that whatever data gets written is in fact accurate. That is really the whole secret sauce. Anything you want to talk about with respect to data on chain, whether it's weather data, whether it's price data, whether it is information as to whether a flight did arrive or did not arrive, whether or not the amount of rain in Africa was exactly 3 inches or more than 3 inches, whatever data you're writing to chain that's going to be used for some sort of derivative calculation, you should only write it to chain when you get a very large number of companies and node operators to agree that that is in fact true. Ethereum is in fact trading at $2,100 today, or whatever that fact is. And the same thing is true when you're moving data cross chain, that the intended message is X, and the message that we're going to write on chain is in fact that same X. As long as you're doing that constantly through this consensus mechanism, you can be sure that you are not necessarily, you don't have a single point of failure. You don't have a single node that might be sending bad data into the network. Because if a single node has a bad response or bad data, and the 10 or 12 or 15 of the other nodes says that's not right, then you can kick that information out and you can just go with what the consensus are agreeing is the right data. This makes it almost impossible for someone to come in and potentially rejigger the information and end up writing bad data on chain, right? This is a longer way of saying what I just said, but these observations are captured by multiple parties. They are agreeing off chain using traditional infrastructure as to what the answer is. And then when they write one and only one transaction to chain using one and only one gas fee associated with that result. So it's very efficient. And that we know is the actual answer. And then that same concept works when it comes to cross-chain infrastructure and then when it comes to tokenization, right? So if you're talking about tokenizing a carbon credit, it's critical that you understand exactly what the carbon levels are associated with the carbon credit, or that you understand precisely what the value of the token is and the exact moment that the token was transferred. All of these facts need to be confirmed as you're moving data across, and the message itself needs to be confirmed. If the message is I would like to move 10 of token X over here, and I need to move 5 of token X over here, and then I want to transfer some Ethereum from here to here, all of those instructions have to be verified through a consensus mechanism. Else you run the risk of someone coming in and potentially hijacking any part of any leg of that transaction, right? And so it's critical in the tokenization process that you have that consensus validation that in fact what you're trying to accomplish is real, and that the underlying asset with which you're tokenizing is also in fact verified by these third parties. We're getting a little bit close to the end of my time, so I might whip a little bit quickly through some of the end here. This is the picture of the full cross-chain stack that we use here at Chainlink. As I mentioned, consensus in transport is that consensus mechanism. That really is the underlying factor that everything is built upon, making sure that data that is transmitted rather, has been agreed to by all parties. That results in messaging, as I mentioned before. That then results in messaging which could go cross-chain, right? Which in the form of bridges or apps, and then also can bring specifically to CeFi, DeFi enterprises they can connect all of their APIs or wallets or whatever else can be connected through that bridge to any chain. So anybody working on chain A can theoretically be reading and writing and interacting with data on chain B with, again, not having to worry about what hardware they are running versus what hardware they might be running elsewhere, right? They don't necessarily have to have that conversation. That is that future, that cross-chain future that the industry has basically been promising for a very, very long time. That is what we now see happening. People can now work in their own ecosystems and not necessarily have direct access to other people's ecosystems and yet still interact with them. And that's really the key that we're trying to unlock. We also have a cross-chain protection network over here that's demonstrated on the right, which kind of is really important. And I kind of skip over it, to be honest, because I shouldn't, but I go too quickly past it. What this is structured and set up as a completely separate entity. The coders who work on a cross-chain protection network don't actually see what's going on over here. We forcibly keep these silos separate so that you have an enforcement agency that's almost trying to find problems in the core network, right? So this I don't know what you want to call it. It's just, and it does everything it can do to secure and protect and ensure that proper activity is being conducted throughout the stack, and is doing so through a completely isolated, independent, and separate organization here at Chainlink in the form of the protection network. This is exactly a slide which basically says what I just said, so I probably should have flipped over to this slide before using all those fancy words, but it does in fact operate independently, and it is constantly checking both the results, checking what the data is, checking that the node operators are in fact getting the right data, verifying that there's no point of attack, and verifying that uptimes and everything else is solid. One of the last slides we like to leave people with is a little bit of who we have at the table here, and I'm not going to read their full bios. I do encourage you to dig around and look at some of the amazing accomplishments that Ari and Lawrence, Dahlia, Dan, and Andrew have. This is just 5 of, hundreds of people that we have Chainlink, but these are some of the top providers of the research information. These are experts, absolute top experts in their fields, and have been for years and years and years. It's absolutely critical to what we're doing here that we're using the very best, we're partnered with the very best, and that we are ensuring a security first type approach to everything that we do within the Chainlink network. We have the ability to learn more about Chainlink here, but I actually think it's far more interesting to switch over to, I think, Q&A, right? And we can talk through what questions people have come up with and how it relevant. And I'm going to keep the slides up in the event that I need to kind of go back to a previous slide and maybe elucidate something that's come up in the question session.
That's exactly right, William. We're at Q&A starts. We really appreciate your you sharing your insights, first of all, about the importance of interoperability, security, and automation underlying really decentralized financial services today, and everything that Chainlink is doing is really, really important for the space. You're pioneering some really key innovations. Again, I'm Diana. I'm head of research and sustainability at GBBC. And we're going to have some questions here with William. So first of all, I wanted to say, could you define what are the most important elements of decentralized financial market infrastructure, and why is interoperability so important today?
Thanks. Yeah, I tried to maybe I try to spend as much time on that as I could up front, but I think everyone is very excited about what a common ledger can produce. right? And the fact that we don't all have to individually determine what truth is actually
Exactly.
yeah, it unlocks a huge opportunity. And I think
In one
that
source
again,
of truth.
yeah, well, it is, and it's just, I mean, this, I don't know how many millions and millions and millions and hundreds of millions of dollars banks have to spend just to verify that their ledger matches the other bank's ledger, but they do that. I mean, there's auditing, it's a huge industry today to make sure that everybody's data matches everyone else's data, and it's important, and I'm glad that they're doing it. But you don't necessarily have to do that in the future where everyone's data is just visible, is visibly being posted in a centralized ledger, and you actually have these private networks already working for banks in a lot of ways that are doing this today. So it's really bringing some of that vision to front. But the point I'm trying to make is not just how useful it is to have that centralized form of truth, but that centralized form of truth has to be interoperable, because otherwise it could be siloed, right? Making sure that if I've written my truth over in Ethereum and someone else is writing potentially their truth over in Avalanche, without visibility between those two things, there's a possibility that those truths could not match, right? Or it could be that I'm a developer today and I need to pull truth from 10 different sources in order to understand what I need for my application. All 10 of those sources might not necessarily all be on Ethereum. They might not all be on wherever, right? Or Binance chain, or God knows what. People are going to be basically building out these application layers all over the place. We see it every time we go to one of these large conferences. People are building in radically different places. And so to say that I can only work with applications that are being built in my infrastructure and you can only build on your, to say that there's even 100 competing infrastructures is in it itself a huge error in thinking as to what it is we're trying to do. What we're trying to do is build a single infrastructure where everyone can build.
I don't think most people realize the sheer value of transparency and open data that's available for all, so that everybody in the system can work with the same rules under the same conditions. Truth in essence is one. It shouldn't be many different versions of truth, because that undermines the concept of truth. And when we are operating under data silos, like happens so much in the financial system today, it just leads to a lot of inefficiencies, like you're saying, which is why I'm so excited about what you do. Moving on, as you talk about markets and the value of tokenization, could you expand a little bit on the value and the trends you're seeing today, and in what areas? Because there's a lot of excitement in tokenization across different tokenizing financial assets in any and every way. Also, you mentioned carbon credits. What are you seeing today in terms of growth perspectives, and what do we need for it to take off at scale?
So most of the buzz, and again, there's confirmation bias being in New Yorker probably, but most of what I see is there are esoteric alternative assets that trade very, very slowly today. The good example is if you think of some large real estate, billions and billions and billions of dollars of real estate in the desert in Dubai or something, that someone wants to build a huge complex. The old story is a big broker, like the Jared Kushners of the world or whatever, run around and try to find people to fill those slots, and they build all these shares, and they have all this complicated paperwork, and you get this highly illiquid thing with a 10-year maturity date. And it's really just kind of the rich and the famous, the people who can afford all the lawyers, the people who can afford to get the investments and do all the KYC, and the people who can afford to do all the research. These are the folks that might work their way into that kind of project. And those things trade brutally slowly. And if you want to get out of one of those things, it could take months, right? If you want to be selling early, it could take months. There are millions of examples of like this. Banks are creating, banks and financial institutions and hedge funds and mutual funds are creating alternative assets all the time. They have been forever. This is not a blockchain story. This is how it's always happened. And there's no legal requirements. I mean, they have their own legal jurisdictions they have to operate within, but there's no reason why they have to do that on paper. They're just as happy to do that on a blockchain. These are the things I think that are moving over the fastest, right? These are using a tech stack today that is absolutely archaic and incredibly slow. And it's actually not a technology problem. The technology is already there. The ability to tokenize, anyone can go online and download some code today to tokenize. The ability to use a function to kind of KYC individuals is there. The ability to get people's accounts and get people
We have
wallets.
the tools.
Yeah, it's all there, and it is absolutely happening. The custodians are there too. I mean, the largest custodians of crypto in the world are actually, it's BNY Mellon, it's Fidelity. Like they're not super loud. I shouldn't be talking on their behalf. They don't like to brag about this stuff, and they don't want to call attention to themselves. But the custodians are there as well. They are already custodying for high net worth and for their institutional managers. They're already custodying tokenized things, everything from NFTs to these larger investment funds.
Mhm. What about the public sector? Go on.
I was just going to say you had mentioned carbon credit. I was just going to say that's a little bit more interesting. That there's a little bit more regulatory issues about that, and so that's moving a little more slowly. But I'm super excited about what happens once we really unroll the blockchain into that space, because I think somebody came up with a report in the European Union that they suggest they believe something like 70% of credits that are traded in the European Union might in fact be double spent.
Oh
Like
yeah. We need so much more transparency. We need a better accounting system. And there's no better way right now than the level of transparency through a blockchain based that I mean, I know Chainlink, you guys have been involved in some of our working groups with IWA using like some of our token taxonomy framework standards for carbon credits, but that's a huge opportunity, and we're just in the beginnings.
Exactly. I mean, that might be that actually might be the biggest of all, just because of its importance, not only to us, but the fact that it's more and more companies are putting more and more money into that problem every year.
Mm-hmm. What about the public sector, in the sense that the next question would be, an important player in the financial world is the government. It issues safe assets such as T-bills, and they're used to underpin other financial instruments. Second, the development of CBDCs may increase its influence on the digital economy. Do you currently offer solutions for public financial institutions? Do you work with any of them that you can say?
So we don't like to talk about specific projects, generally speaking, just because of the NDA rules and all the rest of it. I would say that, so first of all, the tools are of course available for everybody. There's no restrictions on who can use the tools. Think of it as an SDK of sorts, an infrastructure play. Anyone can be building applications. We absolutely, positively have application developers today that are building applications for government use cases. And just in the same way we have application developers building it for private use cases. There's no reason why CBDCs could not be using proof of reserve, for example, to verify that the underlying fiat is in the underlying account. So it's a bit of a no-brainer in that regard. I know that these are topics that are a little bit they're not always the easiest thing to talk about with Web3 crowds. The Web3 crowds tend to be a little bit nervous about some of these governmental projects that are also in the blockchain space. But we're agnostic. I mean, we're an infrastructure layer. We are there to help teach people how this works. We are help to teach people how to build their applications, how to connect in to these data sources, how to add new data sources to the library. And so, the more the merrier, regardless of the use case, as long as we're not helping you to commit crimes or whatever else, we're certainly there to try and help you succeed as you build your applications.
Yeah. When we talk about security also, that's a big topic of a lot of focus. How do you embed safeguards, and how do you ensure, for example, when you're using smart contracts or oracles or the interoperability aspect, there's a lot of points of potential risks. And I noticed that you've explained it. It's very interesting how you have like automated flags when something could go wrong, but what could go wrong, and how do you account for it through all this end-to-end management?
Yeah, a lot of the things we read about when someone says, "Oh, a bunch of money has gone missing," right? Or somebody hacked a smart contract. A lot of times it's because somebody confused or tricked the smart contract into thinking that a fact was different, right? If I write a smart contract with you that says, if Ethereum goes to $1, you have to give me all of your Ethereum or whatever. I mean, that's a ridiculous concept, but let's say that such a smart contract existed. Somebody would think to themselves, "Oh, I'll write that. I'll take that trade. There's no way Ethereum is ever going to go to $1. I'll buy that all day long," right? And next thing they know, that smart contract gets hacked, and in fact, the smart contract does think that Ethereum has gone to $1. And then that individual has basically lost everything, right? And it's a silly thing, but it tells the story of what can happen if smart contracts are not independently verifying facts. They're not smart.
They're not smart.
They're not smart, right?
Yeah.
They're programmable, they're composable. That's what makes them smart. But if they don't have proper data flowing into them, they can be tricked like anything else, right?
There's always going to be an infinity of possibilities that the smart contracts will not have accounted for.
That's exactly right. And the same thing is true if you're moving messages across chain. If the smart contract thinks that the message you're trying to move is, I want to send 27 BTC to wallet address 7 or whatever, it'll just do that. That's what it was programmed to do. That's what it will do. But it has to ensure that the instruction it's being given, the data that's being given to it, is in fact accurate. And that goes back to the consensus model that we talked about before. You should never, ever do anything in public blockchain networks or private blockchain networks that has not been verified by a significant number of parties to ensure that there's not a single point of failure in that process, right? It comes down to as simple as that. You radically reduce the likelihood that any number will ever be written that is incorrect. I'm not saying the risk goes to zero, but it goes as close to zero as you can get.
Yeah. Someone also asked, when will the CCIP, I think that's the interoperability protocol that you shared, and it was during you sharing the tech stack. When will it be released publicly? Would you? And tell us more. I think there's interest.
I'm going to give you all the inside information, all the stuff that you're not allowed to say public. If you're listening to this one, that's where you're going to get all the goods. We've got active alphas, betas. We've got people building some really amazing stuff on CCIP today. We do expect there's going to be a public version of it. I will leave our large communications. I think we have hinted and wink, wink, nudge, nudge, said that 2023 is the year that's going to happen. But I will say that if you're interested in it now, there's no reason why you can't be part of the beta program. We do have people actively working on it today. We like to handhold, we like to work with you. We like to try to find any flaws we can together. We try to beat it up together. So we're still in that stage. But if you are serious about using it, and if you're serious about participating in that, there's no reason why you shouldn't already be talking to us about that, because that code does exist. And with our guidance, we would love to help you start figuring out how to take advantage of it. And again, you got it.
Your email is there, and
that's right. Yeah, please do reach out. And so we have people from the largest banks, institutions, clearinghouses, and things of that looking at it. We've got also large DeFi players, and we've also got small folks who are curious, who are building some cool stuff. So there's no, we probably can't take every single person into the beta, but we'd love to hear about how you want to use it and see if you're a good candidate to help us iron it out.
And finally, last question, we're going to have to make it quick. Is the protection network the same as the anti-fraud network that was shown at SmartCon? Great overview of the industry and Chainlink, and someone really enjoyed this. Robert, what's that?
That's very clever for someone to have picked up on the fact that slide has changed. That's simply a branding. Yeah, that's just a branding decision. We felt that protection is just a better word, and I think it's more broad. I think it's and to be perfectly frank, we might change the word again a year from now. That's what companies do. Companies come up with better words for things as the market evolves and they get more feedback from folks. But it's the same concept, right? It's the concept of a fully independent system and a fully independent set of employees whose whole job is to figure out how to protect the system without interacting with the other team. That's its beauty and its importance.
All right, so we reached the end. Thank you so much, William and Chainlink Labs, for joining us today. It was a really thoughtful and engaging presentation and Q&A on smarter finance and tokenization, on-chain finance, and all the components it entails. We really look forward to hearing more about Chainlink's progress, as you have so many opportunities ahead. A recording of this presentation will be circulated to all those who registered, and it will also be shared publicly on GBBC's YouTube channel. Thank you and have a great day.